rundown. Joining us now, John Carney, economics editor for Breitbart News, co-author of the Breitbart Business Digest, and Scott Bessent, founder of T-Square Group and senior economic advisor to former President Trump. Gentlemen, welcome. John Carney, this is the Fed bungle. Okay, come on. If this is a revolt of the bond vigilantes. The 10 years gone almost up 75 basis points since the Fed had the jumbo rate cut of 50 basis points. Now bond rates are pulling stocks down. The Fed looks like a damn fool. I'm sorry, but they do.
They repealed the Fed's rate cut, basically.
Yeah,
they said, Fed independence, bah humbug. The market is saying to the Fed, you did the wrong thing. And this isn't going to go away, Larry. Right now, they do think they're going to cut in November, but that December cut is going to come out of the market very soon because people are going to see the numbers still coming in strong.
If they cut the rate in November, I know you want to be a little more statesmanlike about that because you're advising one Mr. Trump. But the fact remains, if the Fed cuts again in November, there's no reason bond rates won't go up more. They're feeding into inflationary expectations. We do not have a collapsing economy. We still have stubborn inflation, even though it's at a slower pace. The level of prices is still 20% above where it was 3.5 years ago, Scott. I mean, the Fed bungled this, and they should acknowledge that. Either that or if Mr. Trump wins, Jay Powell should resign. That's my view.
Well, Larry, if
you don't have to answer that last part.
No. But if somehow the next move is a hike,
yes,
Jay Powell should resign.
A rate hike.
A rate hike.
Yes.
And I can't tell you. I think my most successful strategy this year. They have this so-called dot plot where they come out and signal what the path of rates is going to be, what the path of rate cuts is going to be, and it's been wrong every time. Every time. So beginning of the year, at one point, maybe last November, is pricing in 5 cuts. Then beginning of the year 3. Then they got a little religion, and in June it was 1. Then things weakened over the summer, so they came back, and this time it's 3. But this jumbo rate cut, I said it the day it happened, completely inappropriate. And Jay Powell, there's a study that shows people who have fallen keep looking down at their feet, which makes them fall more. So Jay Powell keeps looking at his feet. He let the great inflation happen. Now he's terrified that there's going to be a recession. And what happens if we get this recursive reflation like we did in the 60s and 70s? Because this is just how it happened.
I mean, Scott is right. The economic estimates by the Fed are completely wrong. There's a couple of things I want to chew on, but this Fed thing is such a bad story, and it's starting to hit into the stock market. He was overly exuberantly dovish going all the way back to the Fed Jackson Hole meeting in August. I think that was the first surprise. And then the September jumbo rate cut of 50 basis points. But the rhetoric, even in September, I mean, you kind of smelled a rat way back in August. We think the Fed knows more than we do. I don't think the Fed necessarily knows more than we do. And arguably, with their poor models, they know less.
Mary Daly just said to the Wall Street Journal yesterday that she saw no new information that would mean that the Fed should slow down cuts.
Really?
I mean,
the San Francisco Fed lady.
The San Francisco Fed head said no new information that would mean that they shouldn't keep cutting. That goes to what you're saying. They're just blind if that's the truth. Everybody else in the market sees that obviously this was a mistake, that obviously they need to slow down the cuts at the very least, and the next move could well be up. So, and I agree with you guys. If it's up, Powell's got to go.
Yes, no, it's an interesting point by Scott.
Up and out is what I say.
Scott, you've written a good op-ed piece for The Economist. The world trading system's broken, in a word. Now, we won't solve all that today, but the world trading system is broken, as you point out. And the hopes on the economic and national security front have certainly not been realized, particularly in the era of China. What do you make of that? And I know we're not going to solve it all today, but you have a couple of thoughts for us we can chew on?
Yeah, Larry, free trade has become unfair trade. And more working class, whether it's Americans, Europeans, even South Americans, are rebelling against free trade. And the door is going to get slammed shut if we don't fix this system. In medicine or biology, what's the worst condition? It's a mutation. And right now we've got a mutation of the system that is not working. China is the most imbalanced country in the history of the world. And they are exporting their industrial policy, their economics to us. And Donald Trump has a solution, and it's reciprocal tariffs. You, the great Art Laffer, was the one who told me Donald Trump is a free trader at the end of the day, and it's a strategy: escalate to de-escalate.
I say to people, reciprocity is the new free trade. But you can't have, you point this out in your article, you can't have, if the United States is running essentially a free market economy, right? Probably less so now than 4 years ago, but putting that aside, we are, relatively speaking, a free market economy with a very low average tariff rate of only about 2% plus. China is not a free market economy. India is not a free market economy. And they have tariff rates that are 3, 4, and 5 times the size of ours. So therefore, traditional free trade economic literature doesn't work because you don't have any equivalence between the trading countries.
You're exactly right. And look, we're even having problems with it working within the U.S. California is really upset with what's going on in the red states, Texas, Florida. Everyone's moving there. Industry is taken off. The red state economies are great. New York, California, people are leaving. So imagine trying to impose some kind of similarity, or you use the correct term, equivalence, versus China. Even our European trading partners, Germans have a lower propensity to consume.
That's right.
Our allies in Japan, they seem to like a weak yen, which sets up an unfair trading environment that has to be addressed.
Go. But it's important points. We'll have you back, as we always do, and deal with this. I know that you're in basic agreement with this point of view, but we're running out of time.